Hi everyone. Today I'm here to give you investment tips that I've learned throughout a few years, I would say since roughly 2023, where I began with a really small portfolio and I've grown it around, or I've grown two portfolios, especially in the past, I would say 6 months of being more active in the market. I've grown it around 15% each, so 30% combined. When you're thinking about becoming an investor, you want to really be aware of all the different brokers that you can partner with and put your money into. Fidelity, E-Trade, Interactive Brokers, Charles Schwab, Merrill Edge, and Robinhood are some of the top ones that come out when you just Google. I'm specifically going to focus today on Robinhood because that is the one that I use and I have had really great success, and it's just overall a very smooth mobile app if you're on the go. The app has actually more features, I would say, than the website, and it's really user friendly. It's a growing kind of application. Once you're in Robinhood, it's free to open an account. You can pay for basically a add-on edition of $5 a month called Robinhood Gold, and they give you some perks. Some of the perks, and these change, are subject to change, but you get APY, which is your annual percentage interest rate. Uh, right now it's at 3.75. When I started, I think it was at 4.5. So if you pay $5 a month, $60 a year, um, APY gives you money earned on money just sitting there that you're not investing or actively trading. And going into specifics, once you understand what broker you're going to partner with, I recommend, again, Robinhood. I'm not paid or sponsored by them, but it's just an application that I really have come to love. A few metrics that you want to look at is the price to earnings ratio. I would say it depends on each industry, but roughly a PE that's higher than 50 um, means that the stock is trading above an elevated or above the industry standard and at an elevated price. That means you would not want to buy. In theory, you would not want to buy that stock at that time. Another price or indicator is the if the price is close, or the price relative of the active stock price for the whatever company you're looking at compared to the all-time or 52-week high. So in the past 52 weeks, the highest that Robinhood has been is 153, for example, which was actually early October. We're in October 24th right now, and somewhere around here, yeah, October 9th. And uh, that means you do not want to buy stock unless you have some magic wand that you can know that if you buy it up here in a few days or weeks or months, it's going to be up here. Most likely, if you even buy certain stocks at the all-time high, if you're going to hold for 3, 6 months, a year, it won't be the worst investment. But if you're planning on selling within a week or month or two, you'll see that there's corrections in the market. Warren Buffett said this quote that I live by in my head when I'm thinking of investing, and it's be greedy when others are fearful, and be fearful when others are greedy. What does that mean for this stock, for example? When others are greedy and holding, when the stock is all time at this point right here, let's say you bought it at 117 and you're holding, it's kind of flat, and then it goes up and to 126, and then there's a correction to 121. um, then it pops off and you're holding. If you're, you also have to understand what is your strategy. If you're going to hold stocks that you buy today for more than 6 months to a year, you really don't, it doesn't matter the price that you buy. It just matters that you're buying. If you want to optimize and kind of take advantage of buying at dips and selling at highs, which is my strategy, you want to understand where the price is relative to the all-time high. And when other people are being greedy and holding on to, in other words, at the top, which again is fine if you're holding long term, but if you're kind of trading short term, and it could also apply to different aspects, is be scared when things are all time high. And that kind of is going to lead me to the AI bubble that you might have heard. And it's true. And I've This is why I'm kind of positioned the way I am. I'm in and out of the stock. You'll see right now in my individual, I have nothing bought. I just sold and I had my play for the week. I have kind of weekly, monthly plays, or that would turn into monthly if they keep dipping. Um, and eventually selling at the top. I recently bought, let's see, Robinhood, for example. This wasn't a great game, but I bought uh, October 22nd, 2 days ago. I bought 30 shares at 129. So that's a 1 week. So October 22nd. So it's October 20th, let's say, and it's pretty high, near all-time highs of 150. And then I started seeing a dip on October 22nd, somewhere around this date. I bought it at, what was it? 129. So in the early mornings, I had seen, if you can see this dip right here, I had identified it and I bought it. Then it dipped a little more and I bought more shares. The issue with this, and I also had other plays going on simultaneously, I can't predict the market. It dipped even more. It dipped from the opening day of October 22nd from 130, 128. It dipped all the way to 122. What do you do in those moments? If you have extra cash, you buy that dip because you understand, you see this increase on a weekly and a monthly, it's a little bit more complicated, but let's say on a weekly basis, October 17th started at 126, increased, then people are selling. So be fearful when others are greedy, holding or buying here, maybe people that are FOMO and saw this bull run. You also need to understand basic terms. Bull runs are people that are optimistic about the market, and bears or bearish are people selling because they're scared of the market for whatever reason. It could be news, it could be financial results that were lower than expected. Um, it could be so many different factors. And so you want to buy. I didn't buy, and I had other plays that I had also, and I'll get to that I was in. So my money was a little bit tied, and I also wanted to see. I don't know when it's going to level out. Like if I'm doing this live, I can just see it's going down, and then it's stabilized. So I probably bought around here. I wasn't able to catch up the extreme bottom. And this is another thing, you can't really time the market, or it's hard to time the market because you don't know. Up until that point, I only had visibility to the left side. I didn't know what was going on to the right, but I can make um, a hypothesis or an inference on where it's going to go based on historical data. And Robinhood, again, if you understand the business, they're growing users, they're becoming more profitable every quarter, every year since they've been IPO'd. They're overall just a growing company that is probably going to surpass all of the other brokers within 5 years. Robinhood, you can open up an account, buy Robinhood stock on Robinhood, and make money without even thinking about it. The issue now again is you want to have a set target price to enter and to exit. When I'm looking at it on a 1 week, 1 month, 3 month basis, I know at that point Robinhood has continued to hit all-time highs. Before this all-time high, this was the all-time high, and this was the all-time high. Then there was dips, and this was the all-time high. Year to date, like if we look at the max, like there's all-time highs and then there's corrections. That could be numerous things. It could be government shutdowns. This is not a government shutdown. Okay, this is I would say the Trump curve when he announced tariffs and people had to price in tariff expenses for each company slash just the overall uncertainty. And it just takes one investor on the opposite end that's an institutional investor that holds 20 million in Robinhood, let's say, for example, making up a number. They hit the sell button, and now that stock goes from 130 to 122, $8. That would take a huge amount of money to drop, or a lot of individuals to sell, which goes back to the Great Depression on when the New York Stock Exchange dropped by, I don't even know the percentage, by a lot, and people lost millions or billions. Oh, individually millions, aggregate billions. So you want to have an enter and exit price, especially if you're going to be in and out and trying to take advantage of the dips. In this case, mine was 132. I sold and I've been inactive since. Since then, I sold probably around here, around this peak. somewhere around here, 132, like a little bit under that. I could not anticipate, and that was like a roughly, I would say 3 to 5% increase from this strip, but I did not know it was going to increase to 139. If you have more risk that you can take, you can think about it, or if you're a long-term investor, which I also am, but again, I don't want to be hit. I don't want to take the cut or the loss unrealized from one, let's say I bought it here at 150. I'm like, oh my God, Robinhood is taking off. I don't want to miss it. And then you realize people are selling and taking profits. I want to take profits in this. So I want to buy dips. My philosophy is buy the dip, buy a 5% dip in good stocks and sell at roughly a 3% to 5% gain. What we saw with Robinhood even today, and I'm scared, be fearful when others are greedy and be greedy when others are fearful. I'm scared right now that this can drop, and it has. It will be stabilizing. So my new price, target price for Robinhood is roughly 130. Next time Robinhood hits 130, I'm buying. I'll buy roughly 30 shares. Let's see how much that would be. 4,000. And if it dips below that, we have kind of an indicator that the floor on a week basis would be 122. So I would buy more on that dip, and then that would make my average per stock go down. So I can't do the math, but if you buy 30 shares at 130 and then you buy, let's say, 15 shares at 122, your price would go down relative based on the amount of shares that you bought. So to summarize, understand, is the PE of the company priced very high? When there's dips, that PE drops. Is the price of the stock close or surpassing the 52-week all-time high? I would recommend looking at the stock market for at least 3 to 6 months. Understand two basic numbers, the week high and the PE, and buy it in a relatively fair price. Every time you look at a stock, understand the PE and the week. Have an enter and exit price in mind if you want to keep your money liquid, if you need access to that money within, a month. Maybe you need that money for an emergency. Maybe you just want to have it to pay rent, part of it. I don't know. Whatever your reason is, you want to make sure, and I would recommend stocks always have an enter and exit price. If your exit price, let's say in this Micron, for example, I had an enter and exit price. I entered at 199, it dipped. I bought more, 35 shares. I doubled down. I bought 35 shares for $6,000 at 193. October 23, at around noon, I sold my shares at 203. So those two combined. I might have bought more before. Let's see, buy. So 99. I had bought and sold for a little bit of profit here. The market for Micron was really fluctuating that day, and I was trying to price it. I said in my head, if I get around 203, I'm selling, because I bought so much at 193. And that's what I did. And what happened? Oh, I could not have predicted this. That was 203 was kind of what it was lingering at. It was up in the week basis. I look at it on a weekly basis. You can look at it on a monthly, on the 3 months too, if you're going to hold it for that long. But a week is a pretty good indicator. It had not crossed higher than 210, and I did not expect it to do this. I could have made so much more money if I held it, but I want to be in and out of the market. So I sold it after I saw this huge jump around there. I think it was like open to the market. And I think I saw the dip here, and I said, oh no, I'm out. I do not want to be caught in a landslide. And then I'm just taking a look. I'm analyzing. Okay, what went on here? Micron surged past, and I've been looking at them. Good news basically came out from Micron saying that they're an underrated stock. I already knew that because of the PE ratio, right? It goes back to, like, if you look at Nvidia, compared to, and it's on near the all-time high compared to Micron. And Micron, you can understand more of their business, but they're basically the storage component of the AI race or the AI space. They focus on memory and storage products sold in the consumer markets. NVIDIA is more of a GPU. I'm actually powered by NVIDIA. My PC is an NVIDIA RTX 5070 Ti. They're more of what can be processed. Video games for stocks, and I'll get to that in this view. This is what my NVIDIA helps me power, and gaming as well, as I have a gaming YouTube channel. Slash investing channel. I kind of want to bridge the gap, and I've always been a gamer at heart, so I want other gamers to understand, just people in general, but also want to earn eventually ad revenue from gaming and just having a channel that's monetized. So road to partnership. Please leave a like and subscribe. I want them to understand investing, and I'm not an expert. I am not a professional. I just understand certain things based on my experience. So Micron just hit an all-time high, and it's a little bit hurtful that I wasn't in the play, but I also know, going back to Warren Buffett, I really take a lot of admiration from him. Um, be fearful when others are greedy. If it's at an all-time high, which it was for like the past couple hours today, literally today is hitting an all-time high, do not buy it at this price unless you're going to hold it out for a year or two. My enters and my exits, and I cannot predict this. Trump tomorrow can say something and this goes down here. That's when I'm buying. That's when I'm most excited, because I know it can only go up from there. And people buying now at 2019, they will be burned when the correction comes. People holding that bought over here, that's a different story. But if you're buying here, that's where most beginners lose money. They need to understand what and when to buy. What stock to buy, when to buy, what's your enters, what's your exits. I could not predict 6% on a Friday. This does not happen. But here we are. NVIDIA, same thing. What's the first thing you're going to look at when you are looking, should I buy now? What's their PE? Some companies, it's good to buy at the peaks if you know, or if you have news, if you have some type of information that I might not have, or if there's still room for upside. NVIDIA is really, really tricky because they're really integrated in the political atmosphere in terms of what are we doing with China? Are we increasing tariffs? Are we going to be easing off of tariffs? And that's something we can't control, but we have to follow as investors. To summarize, understand what broker you're going to use. Understand how much capital you have, because that should determine how much stock you're buying. You want to buy stock on the dip, but also have 3x amount of money to buy if it continues to dip, to bring your average down, and then it'll even out. And once it evens out, that above gets you profits. And then the other thing I want to talk about is you can calculate your own PE ratio, the share price. So what is SoFi, what is Micron, what is Robinhood, NVIDIA, GE going for? 303 divided by their earnings per share. How do you look at an earnings per share for one of these companies? Great question. You type in, and I'll do a live here so you can see, for SEC.gov. Qs are reliable. How do you know this? And then you type in your favorite companies. NVIDIA. I want to see NVIDIA's. To give you a story, back in 2023, I think it was, during my really busy time after work, getting off at midnight, NVIDIA's 10Ks. I saw the trend. I started buying. I only had roughly $1,000 or $2,000 in my portfolio, in my Robinhood account at that point. And I know if we look at it now, it looks like I had 22,000 the whole time. I also did take out 2,000 in profits, just to be transparent, but I did not have that. It retrospects the amount you fully deposit to the opening balance. And I was buying NVIDIA, and I understood Nvidia was going up. You can look at those, and this is how you look at it. A 10K is an annual report. A 10Q is quarterly, 3 months. Different companies have different fiscal year ends. Typically, a fiscal year end is 12/31. Some companies have weird, like Micron actually has a weird fiscal year end of August 28th, where, so understanding how financial statements work. You open up a 10Q, that gives you the full year report. You open up a 10K, sorry, 10Q, it gives you a report full year to date, whatever that date is, and the 3 months of that. So this is their 9 month, this is their Q3 10Q of the year. This 10Q shows you May of this year, May of last year for 3 months, and then May of this year, May of last year for the full 9 months. To keep it simple, for the sake of this video, you want to understand and find their statements of operation, income statement. How much revenue are they making? This number is in the million, so this is really, what, 37 billion in 2025 for a full year. So since August of last year to August of this year, they made 37 billion. These are audited. 10Ks are audited. 10Qs are reviewed. There's analytical procedures and there's inquiries that auditors need to do. And also review the 10Q, make sure it ties to the ledger, tie out the footnotes to supporting documents. And there's a wide range of procedures that auditors have to do. But as an investor, you just get here to sit here and look at the numbers. If you're not super into it, I get it. I've just done this for a living, and now I'm transitioning it to my personal use, so I understand. In 2023, they made 15 billion. In 2025, they made 25 billion. In 2024, they made 25 billion. In 2025, they made 37 billion. It's nearly a 10 to 12 billion in this case increase. Does that alone matter? Yes, but we need to look more. Their expenses, cost of goods sold, stayed relatively flat. It increased, but you would think if they're selling a lot more stuff, their cost of goods is going to increase a lot. They managed to keep that the same. So what this is telling me is that they increased their prices or they became more efficient with their costs. And you can read this whole thing. It's really long and boring, but the income statement gives you a glimpse of what they're putting in their pocket and going down to earnings per share, where if we go back to our favorite formula that then goes back to a PE earnings ratio, share price, we know that, Robinhood, 139. How do we get their EPS? Well, we have to look at their financial statements. In this case, 10K, they didn't make money. They lost money in 2023. So if you're looking at this company and you see that, you're like, wait, they're just about to be profitable. I'm going to invest now. Oh, this is a different company. This is Micron. So if I go 5 years back, 2023, up until August, they released their financial statements right here. August 20. Well, they actually released it later on. They would release it probably sometime in October. So somewhere in October, it started. Like, it's relatively flat. People understand that they weren't profitable. Sometime in 2024, early 2024, they became profitable. That's when they released a 10K or Q. Ugh, can't speak, sorry. It's their 10Q sometime, and people notice. Okay, I can find the exact date. October 6th, 2023, they released that. The next one they released in December. Again, we're on Micron. December. They must have been profitable maybe in the quarter after that, which would have been March. And that's when we see the explosion. Investors noticed their financial statements. They were most likely profitable. It jumps up. Then people are like, maybe uncertainty, new presidents, numerous factors. It did, but they were still profitable. And then the whole cycle repeats, people need to adjust what they think the price is going to be, and now we see the explosion. This is where it's causing an AI bubble. Even though the price to earnings is really low, I like Micron and I'm investing, like there's not so much of a bubble for Micron compared to Nvidia. Nvidia, and not so much let me show you a good example. Um, American Superconductor. This PE is 143. That is extremely high. Even if the stock continues to go up in 3 months, it probably is contributing because of this. That is super high. Oracle's is really high, or it was higher, but it's been going down the past month. When it was up here at 320, it was pretty high. What's another good example? If you know about AMD, they're also kind of a competitor of Nvidia. Look at their PE. That is really high. If you start looking at a lot of these different companies, high PEs, if a lot of these different companies have high PEs, that means that the market is really priced really high. Particularly, ETFs are really safe. I'll go with VOO, Vanguard S&P 500 ETF. You basically own a bunch of different sectors, and that would give you the ratio, and then within those sectors, all the different companies, and which ones are owned more or less than others. And that PE ratio is pretty low. Overall, you can find some good companies. SoFi is pretty high right now, but it's because it has a lot of upside. So when they release their new financials and their EPS, earnings per share, we go back to our income statement. If it's expected to go from a low EPS of 0.70 to a 7 EPS, people will start trading for that now because they anticipate it. Key indicators is the PE ratio, 52-week high. Also, I didn't talk about it much, but the Bollinger Band. It's a deviation of the moving average relative of the stock price. So if it's up here, and I have it set to 52 weeks, so if you come here, you can see length of period with standard deviations 2. So moving average, so it kind of explains it here better. Bollinger Band creates 2 bands around the moving average. You can also just add a moving average to the left, but because it creates a deviation. Each is usually 2 deviations away from the MA, from the moving average. Analysts may use, also another thing that Robinhood is really great at, it explains to you what these different things are. Uses the BOLL to help determine whether an asset is undervalued closer to the lower band or overvalued closer to the upper band. If you're day trading, you want to be trading when it's lower, you want to be buying and selling up here. Same with the weekly trade, but if you do it on a weekly basis, expect to buy and sell on a weekly basis. Could it go up in a day or two? Yes, but then realize if I will stay flat for a while or a day or two, could go up again. But once you're up here, you want to sell. When you're down here, you want to buy. Same with the month. On a month basis, it's pretty high, closer now to 2 up deviations. On a 3-month basis, I also like to do candlesticks because you can see the amount of trades, or if you hover over it. So understanding the Bollinger Band, moving average, order books, if you're also looking at that, I kind of look at it all together. Is this order book going up? That's a key indicator if the price will go up, or is it going down? This closes once the market closes. It's it's past 4 p.m. here, so it's closed. And yeah, look at their financial statements. Income statement is pretty easy to read. You can see gross margin, their other operating income, and or expense. They get to their net income. That's what you really want to see, net income. You want to see revenue, you want to see all these other different indicators, but their net income is what they're taking home, and that's what they have to pay taxes on. Then that leads them to EPS based on the number of shares. It can get a lot more complicated. The balance sheet too, you want to understand if they have their assets are increasing. They are, which is good. Other liabilities increasing. They increased a little bit, but their assets increased way more. And then the stockholders' equity, which is a combination of these two. And yeah, you can read more about their cash flows, where they're spending their money, and all the different items within here. I will say it always is worth looking at commitments and contingencies, especially contingencies. Are they being sued? Micron is being sued, and they did have to pay for infringement of patents. Um, the courts ruled that here on December 10th. Netlist filed a notice that it would appeal one of the patents. I think they lost. Oh wait, no, they filed. I don't know what they're appealing for, but understand that they're being sued by a lot of people. This doesn't worry me too much, but you should take it into account. And that is a bit of just understanding of when to trade, what to look out to trade. Because I can tell you what I'm doing and what I'm trading, but understand you can, give a fish to someone and they'll eat for a day. You could teach them how to fish and they'll eat for a lifetime. I'm trying to teach you all how to fish with stocks. This has been all me. Buy the dips, double down on the dips, sell at highs. Don't be greedy. Don't have fear of FOMO. Trade with your mind, not with your heart. If you're up, I was up 10% at a certain point. I got down here. Until you sell, you haven't really lost. It's called unrealized loss. Realized loss and gains are when you sell. When you sell, that's when you're up. Also keep in mind taxes. You will be taxed at ordinary income, whatever bracket you're at. You will have to pay taxes if you sell. You also have to, with that said, I hope this video was helpful. I hope you learned, and I will look forward to seeing you back to give you more tips and an update on my portfolio very soon. Have a great day.